Hi everyone, my name is Anna and welcome to this edition of the Miami Real Estate Whiteboard. So with 2017 closed out and on the books and 2018 underway, this is a great time to take a look at where we are today in the Miami condo market. What's the state of the market? So in Miami we have MLS data going back to 2006, and I've compiled a report with all the data, all the condo market data, drilled down to various aspects of it, drilling down into various aspects of it, going back from 2006 through the closeout of 2017. As with all markets, the Miami condo market exhibits patterns and trends over time, and it behooves us to take as long a look as possible at that data as we can. So you can download the full report on my website, and in this segment, in this video, I'm highlighting some extreme conditions and patterns that we should all be aware of. One thing that irks me when I see reports in the residential space is that people often report on quarterly or quarter over quarter, or just I've seen a few years of data reported on sometimes, and how 1 year has done relative to the year before it doesn't really tell you much. You need to know, how good that year was compared to the year before it, and how the whole trend of the market has played out. Because the most important part in your investment decision, the most important thing to know is where in any given cycle you are, and you need to take a look going back at least 5-10 years to get an idea of that. Okay, so what are the big things that we should be aware of in today's condo market here in Miami? So volume is the first point that I would address. Volume is a big factor. Volume, you could make the point that volume is a leading indicator, that it precedes price. Where volume goes, prices will follow. And to that end, we've had 4 years of consecutive decreases in transaction volume in the Miami condo market. So I've charted that here. The transaction volume high was 2013, and 2017 closed out 27% below the transaction volume high of 2013. The other factor that I would be aware of is that both absorption rate, months of inventory, and aggregate value of total listings, which is the sum total of the value of all properties in the market, both those data points are at all-time highs, which is not a great thing to have happen while you have a decrease in transaction volume, obviously. And the other main factor to keep in mind in this market is that Miami is like two markets. There's a big schism in performance between the price segments that are supported by the local economy and the price segments that rely upon money from the outside. So Miami is very much a growing, vibrant city. It's population positive, and people need places to live. And segments of the condo market that are affordable to people who live and work here are doing great. That segment ends at about $325,000. Beyond those price points, we're seeing accumulations of inventory and decreases in transaction volume. So as you can see here, at from $200,000 to $325,000, there is 11 months of inventory, which is fine, and that just keeps going up. From 1 million to 3 million, we have 51 months, and 3 million plus, we have 84 months of inventory, which is a little bit scary. That basically means there are no bids. So the 3 million plus segment is not doing so well. Even from 500 to a million, we have over 50 months of inventory. So there's a big divide in how locally supported segments are performing compared to the more volatile, outside money dependent segments. The other point I will make is that as Miami, that average and median condo prices citywide actually went up because the locally supported segment is doing fine. So median prices closed out at $226, and the average closed out at $360,000, and those are actually still off of the old highs in 2007, but are still steadily trending up. So it's really important when you consider the Miami condo market here that it's like two separate ones. One supported by local money, which is doing fine and has increases in transaction volume, and the other which is reliant upon outside money, which is actually doing quite poorly, which is experiencing steady decreases in volume and a very rapid increase in active listing number and aggregate value of active listings. So let's take a closer look and drill down into that million plus condo segment. As I said, the big story is volume. Where transaction volume goes, prices are very likely to follow. And to that end, the transaction volume high for the million plus segment was 2013, where there were 925 condos from 1 to 3 million sold in Miami-Dade. 2017 closed off with 593 sold. That's a drop off of 36%. Now, unfortunately, while transaction volume dropped off 36%, active listing count and the aggregate value of all listings has gone up a lot. If you go to my website, you can see both of those charted monthly going back to 2006. The charts basically look like this. Active listing count and total value of listings has gone up a lot while transaction volume has dropped. Of course, this has led to a lot of inventory, 3 million plus. There are 85 months of inventory, and yes, that is accurate. I have checked that figure many times. It's 85 months of inventory, which basically, as I said, means no bids. 1 to 3 million, there are 51 months of inventory, and 500,000 to a million, there are 40. So why do I, you may be wondering why I break up 1 to 3 million and 3 million plus. The reason is that 3 million plus has so few transactions, the data is really spotty, and the bulk of Miami's million plus market happens between 1 and 3 million. So I tend to separate those. And also, before anybody calls me and says, "Oh, but Anna, are you talking about Miami Beach or some other more remote area where there's all this inventory?" My answer is that as the higher up you go in price, the higher percentage of those condos are in Miami Beach. But just to be sure, I actually charted Miami Beach separately. And if you go to my website, you can see Miami Beach segmented out. And Miami Beach, the months of inventory are pretty much the same as they are for Miami-Dade. There's a lot of inventory at higher price points, and unfortunately it shows no sign of getting better. 2017 closed off at inventory highs. To put these numbers in perspective a little bit, in Miami Beach, December had 11 sales between $1 and $3 million, and there were 523 active listings, and for 3 million plus, there were 3 sales and 288 active listings. All right, so where does this leave us? Well, it depends what you're looking for and what your perspective is. If you have a property that's priced over even $500,000 and you want to sell it in the next 5 years, I would think strategically about how to proceed. The market, I don't see the market improving anytime soon. Inventory has to clear, and for inventory to clear, prices probably will have to move down unless we get an influx of 1 million people from somewhere who decide they have to live here. If you are an investor, I think that we're going to start seeing significant cracks at some point in the relatively near-term future. I think that 2018 is going to see more deals happen. There's a lot of developers sitting on projects that may be looking to make deals with bulk sales. I mean, we'll see. By the way, in this data, when I'm showing inventory, this is resale. This is not including what's under construction. So there's actually more inventory than what is being indicated by resale. If you're a developer, I would look back to the data that shows performance of the locally supported market. There's great demand for affordable housing in Miami. This is why we've had that recent micro-unit designation, and there's all sorts of press and attention about the need for affordable housing, or I should say normally priced, accessible housing in Miami, and those segments are strong. So that there's opportunity there. So that's a wrap. Please contact me directly if you have any further questions and for off-market opportunities.